Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the fancy corporate jargon. Today we're diving into a Form 8K from Inflection Acquisition Corp, the third, and let's just say there are some interesting moves being made. Before we jump in, if you love getting plain English breakdowns of complex financial documents, make sure you hit that subscribe button. And if you want to chat about these filings with a whole community of people who are just as curious as you are, join our Discord server, which is linked in the description below. So what is this all about? Inflection Point Acquisition Corp, third, or IPCX as we'll call them for short, is an acquisition company. Think of them as a company that pools money from investors with the goal of buying another company. They've been in talks to combine with a company called Airwater Ventures Holdings Limited. The big news here is they're updating everyone on the status of this deal, which they call the transactions. This report is essentially a status update on that planned merger. They've entered into a business combination agreement back in August of 2025. The deal involves a couple of steps. First, Inflection Point will merge into a new entity called Pubco. Then, the company, which is Airwater Ventures Holdings Limited, will merge into a subsidiary of Pubco. It's a bit of corporate gymnastics. But the goal is to combine these businesses. What is really interesting is that as part of this deal, they're looking to raise more money through private placements. This means they're selling shares directly to a select group of investors, not on the open market. They're hoping to do this on similar terms to a previous funding round they called the PIPE investment. The success of these private placements is a big condition for the rest of the deal to go through. Now, let's talk about the shares. Inflection Point Acquisition Corp. The third has different types of securities. They have units, which are made up of a Class A ordinary share and a right to get a fraction of another share later. They also have just the Class A ordinary shares and the rights themselves. All of these are traded on the Nasdaq stock market, LLC. The ticker symbols are IPCXU for the units, IPCX for the shares, and IPCXR for the rights. This filing also confirms they are an emerging growth company. This means they get to follow some lighter regulations, especially when it comes to accounting standards, which can be a good thing for them, potentially saving on costs and complexity. The company is also planning an analyst day in the first quarter of 2026. This is where they'll likely present more detailed information about their plans and expected performance to industry analysts. And to help with this, they've attached an investor presentation to this filing. This presentation is key. It is where you would find the nitty-gritty details about their strategy, market outlook, and financial projections. They're also using it for those private placement talks. In the other events section, they reiterate that they are looking to raise additional funds through these private placements. They explicitly state that there is no guarantee these deals will actually happen. This is important because it means the funding part of the merger is still uncertain. Now, a big chunk of this report is dedicated to forward-looking statements. This is standard practice, but it is crucial to understand. These are statements about what the company expects to happen in the future. They use words like expect, anticipate, and potential. They are basically saying this is what we think will happen, but things could change. They really emphasize that actual results might be very different from what they project. They list a whole lot of risks. Things like general economic conditions, the parties not being able to complete the transactions, shareholder approvals not being obtained, and the risk that the business combination might not happen by their deadline. It is a pretty long list, which is typical for companies navigating complex mergers, especially SPACs or special purpose acquisition companies like Inflection Point. They point to their IPO prospectus for more detailed risk factors. This is a common way for companies to manage their disclosure obligations without repeating every subsequent filing. The company also directs people to where they'll find more information. They're preparing a registration statement for the Securities and Exchange Commission, which will include proxy statements. This is where Inflection Point will ask its shareholders to vote on the deal. They stress that these documents will contain important information. They're basically asking investors to do their homework by reading these upcoming official documents. Then there is a section on participants in the solicitation. This is a legal requirement. It outlines who can be considered a participant in convincing shareholders to vote for or against the deal. It includes directors, executive officers, and management. They mention that details about these individuals and their interests are in previous filings. This tells us that not only Inflection Point's people, but also the people from Airwater Ventures and Pubco will be considered participants in the process of getting shareholder approval. Finally, there is a disclaimer that this report is for informational purposes only and is not an offer to to buy or sell any securities. It is just providing an update and doesn't solicit a vote or approval for the transaction. And when we look at the exhibits, the main one is Exhibit 99.1. The investor presentation dated the 12th of January 2026. This is where you'd find the actual details and numbers that fueled all these statements. So, what is the big story here? This is a SPAC Inflection Point Acquisition Corp, the third. Going through the motions of merging with another company, Airwater Ventures, the key sticking point seems to be securing additional funding through private placements. If they can't get that funding, the whole deal could be in jeopardy. The filing is heavy on legal disclosures and forward-looking statements, which is pretty standard, but the real substance, the investor presentation, is referenced but not included in the text we're looking at today. Looking at the overall picture, Inflection Point Acquisition Corp, the third is in a critical phase. Their ability to execute this merger hinges on securing that extra funding. The company's direction really depends on the terms and success of these private placements. A notable risk, as highlighted, is the potential failure to complete the transaction by their deadline, which is a common concern for SPACs. The opportunity, of course, is the successful completion of the merger and the subsequent growth of the combined entity. The outcome of these private placements will be the deciding factor in whether this particular corporate story continues or collapses. Alright, that is our breakdown of Inflection Point Acquisition Corp, Thread's latest filing. What is your take on these potential mergers and the importance of private funding? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord in the description for more discussions. Thanks for watching. See you next time.